Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Okay, today, big day in the markets. This candle right here on chart of the S&P 500, down 1.25%. We were holding the highs after a breakout. Boom. We're not going to get this kind of breakaway move as we suspected. Okay, so this is definitely the worst sell-off. Okay, let's just say that this is probably the worst debut ever for a Fed chair. Okay, we'll get to the implications and what I think next and the asset classes that are being affected. But first, let's go to the technical picture. Okay, the technical picture now, despite this down move, okay, if we bring in the moving averages, it's still bullish. We're still trading above the 50-day moving average. Okay, so this is still a bullish pattern. However, we mentioned yesterday that we don't know where it's going to go up, breakaway move, although no, or down and cover the gap. Well, we went down and we covered the gap. And this is fuel for the bears, okay? Because now you have a lower high. Move up, the lower high opens the gate for a move even lower, okay? We mentioned before, as we were down 5%, that the sentiment here never went to extreme fear. Okay, so we can continue to go there. So the technical picture here is still bullish. However, you can have a lot of you have some ammunition for the bears because of what happened today and the possibility of forming a lower high. Okay, so keep that in mind. Although technically we're still bullish. Okay, let's go to the fear and greed we saw it before. We're back at fear. We never visited extreme fear. So because of this move, and if we have a continuation, that is, if we still get the worst sell-off that continues because the market is scared that he will raise rates, okay, we could even go lower and we could get to this extreme fear move. Okay, it might undercut this here, undercut the 725 level that we hit, which covered this gap, undercut it before going up again. Okay, I don't think this is going to terribly destroy the markets. Who knows? You never know how the excitement might might materialize, but we could get a lower low here, which would bring us to extreme fear. Okay, and that would be good to set up for a multi-move. Okay, so the technicals are still bullish, but there is some ammo for the bears. Okay, so the fear and greed index, fear, market momentum, everything is going down, and this is what worries me. The stock price breadth was going to fear, and now it's extreme fear because of the action that happened today, which we'll get to it. Okay, and again, the two things that worry me are the extreme breadth came even lower, which we'll mention, and the neutrality, the volatility. If you look at the VIX, okay, the VIX popped to 18 only, still below 20. We can still go much, much higher if we get to the extreme level. We could, if we get down to the SPY here, undercut these lows, get more fear in the game, really undercut, right? Even retest the highs of 700, which would be something. Okay, that would be something. What is that? That's a 40-point move. That's another 6%. That would be devastating. That'd be like a 10% move from top to bottom, about. Let's see here, 760, a bit less, maybe 8. Okay, so we have this move here in the VIX, in the fear and greed index, that we can still get to even more extreme fear. However, we saw last week at the AII investor sentiment that we already have a lot of bears out there. That's why I don't think the move is going to go down. And I suspect that when this AII comes tomorrow, which I'll mention, the bears will be there and the bulls will be less. Okay, so the sentiment is still, we never went to extreme fear. We can revisit the lows. Always have that in mind. We can revisit the lows at 725 and go to 700. It's not out of the question because of what Warsh said. Unless tomorrow the market completely disregards what Warsh said, which I don't think. I think there might be some continuation on the downside. Okay, so let's get to the big thing, the worst sell-off. Okay, the worst debut ever, Warshmageddon, the Warshak test failed, whatever you want to call it. Okay, so Fed meeting recap. Warsh announces task forces to overhaul major Federal Reserve operations. He was talking very tough. He says we're going to redo everything. We're going to get rid of the dot plot. No forward guidance. Okay, this guy wants to change everything. Okay, but my impression of Warsh is that he's basically saying that we're going to make it so that the Fed operates as a decision by committee type of environment, which is like, it is the very definition of a bureaucrat. He is a bureaucrat. He just whatever everybody else says, we're going to take into consideration, and we're going to. It's just pure bureaucracy. It's more of a bureaucracy. The Fed is going to be more of a bureaucracy than ever. He's going to be probably a very weak leader, and he's going to lead by committee. Okay. He also said there's going to be a new way to measure inflation, in which he just looks at the left side of the decimal. Like if inflation's at 2%, that's enough for him. Target reached. Even if it's 2.5, 2.6, 2.9%, he considers it 2. He drops everything to the right of the decimal, 2% mission accomplished, which to me, that's very dovish. Okay, this is a very dovish way to go. So the market sees a very, very devastating president of the Fed, Fed chair. Yet I'm not so sure. Okay, and of course, the number one thing that he mentioned is task forces. Everything's going to be a task force, task force, task force. So you're going to have bureaucracy increase massively at the Fed. Okay, so what do interest rates tell us? Well, first, the U.S. 10-year was down and then it moved up, but still not devastating, not devastatingly high. Okay, what really scared people wasn't the U.S. 10-year move, which was fairly muted. It was the Fedwatch tool. The Fedwatch tool. I'm looking at the Fedwatch tool for all of December of 2026, so all of 2026. And look, this column here was at 40%, and the one hike column was at 42%. They're even. Now look at it. The no hike, no change is 12%, and a hike 87% chance of a hike. Whether it's one hike at 35%, two hikes at 35%, three hikes, and a 2% chance of four hikes, 1% move by the end of the year. That's crazy. This is very devastatingly bad for the market. Huge shift. Market participants expect at least one. There's going to be a rate hike, basically. They're pricing at least one and probably two rate hikes this year, and all due to inflation. Okay, so the market really, really moved. Okay, and the market expectations really, really moved, and it's just down like 1.2%. It could continue. Okay, and these averages could go much higher. We know that, and I suspect that happens if we continue to go lower. Okay, so right now the momentum is back in the bears side. It's the worst sell-off. Okay. Let's see what happened to various asset classes. Okay, I just think he's going to be a bureaucrat. It's going to be the same as before, maybe even worse. Worse meaning like less of a leader, more of a committee type guy. I don't think it, it changes that much. We'll see. Okay, the market thinks so. The market thinks this is the market. It thinks we're hike for sure. We're getting at least another hike. But if inflation and the war are over, I don't see that happening. Okay, so today, what do we see in the market? Basically, what happened? What's the effect of the war sell-off? Let's look at the overall market. Red, except semiconductors. This is what I meant by the market breadth. Semiconductors are bit today when everybody else is down. That means the breadth got worse, not better. It went back to the other way. Okay, so I don't know why semiconductors are up. A rate hike will destroy these guys too. Okay, badly. So these guys, like even though the market's down 1.25%, the semiconductor index today was like still up 1%. You can see it's up 1%. Okay, even though it's down on the day, it was up much higher, like 3%, I guess. And now it's like up 1%. So again, I don't like it because we still have the negative divergence. I think this rolls over if the market rolls over, which I think it goes lower before going higher. So yeah, I'm not very excited about the semiconductors, even though they're showing to be extreme strength. They're showing extreme strength in this move. Okay, I'm telling you, if the market goes down, these guys will get hit harder than the market. Okay, if it goes down, because now we've priced a lot of that in. Remember, this is a huge shift from 40%. All of this no hike column moved into the two hike column. Okay, instead of one hike. Now people think 1 to 2 for sure. That's what they're saying. Okay, let's see that. So semiconductors are holding up. Okay, amid this mayhem. So that could be a sign that the market goes up. Okay, and if that's the case, then breadth will come back. But I'm not so sure. I suspect because we didn't get this extreme move that we need to have an extreme fear type of move first. It would be nice for the bulls. Okay, when you get a lot of bears coming in. Okay, maybe break down here on the SPY, whereas we said that the SPY would break this level here, the 725, undercut it a bit, and then go up. That would be great. Okay, we don't know what's going to happen. So far, we're still in a bullish technical pattern, yet lower high potential for the bears kicking in. They have ammo, and they have more ammo to go down, more sentiment. We never reached extremes, so we could reach it. Okay, so that's it for the semiconductors holding up. But if the market goes down, SMH will go down even farther. Okay, so what about gold and silver? Guess what? Smashed. It was up. I think it was down $100. So gold is like down $100 from the highs. Still a downward pattern. We're still at extremes, although not as much as we were before. A lot of buying happened here, but it didn't break above. If you look at the moving averages, remember we mentioned it. It didn't break above the 200. So we might go around. I'm not comfortable. I'm not comfortable. I'm still not comfortable because we're still at the lows. I'm not comfortable being long. I would be more comfortable being long. I am comfortable being long, but I would much prefer the price action to go above the 200 before I think a sustained move higher will commence. Remember, we are still in the summertime. Okay, we could have the summer doldrums, buying sideways movement, even retest the lows and get some kind of negative divergence if that happens. We go to new lows and this action still stays higher. Who knows? I don't know what's going to happen. But okay, I'm still bullish the sector medium to longer term. Okay, we have to see the Warsh effect play out. He could start talking more dovish. He can start saying things that erase the market's perception of massive hawkishness, because that's what they think. They think him coming in is very hawkish, and what he said now didn't ease their concerns. So gold is down, silver too. Okay, it's the same thing. Silver down even more, although silver holding up better because it's right at the 200 above it. Okay, if it could hold the 200 and stay higher, meaning if all this Warsh effect gets reversed soon, it's very, very positive. Okay, so we have gold and silver not doing well as expected and with rate hikes, but oil is still going down. It touched this 200 and came back up because eventually I think this has to do with the war. As we mentioned, as the war looks more and more likely to be over, it'll continue to drift lower. Okay, let's get rid of the moving averages. I can see it much more cleanly. I think we go all the way down to the 65 level and probably the 55 going forward. Okay, so yeah, increasing rates will also be bad for oil. So let's reiterate. Okay, the worst sell-off, Warshmageddon. Okay, this guy is very, very bureaucratic. Okay, he wants to rule by committee. So he also, task force for everything. He really didn't say much. Okay, he really didn't put the market's mind at ease at all. Okay, he also said there's going to be a new way to measure inflation where he drops everything to the right of the decimal. Okay, to me that's very, very dovish, because he can just say, we reached 2% because the first number says 2, therefore we reach 2% inflation, even though inflation could be at 2.9. So he might not be as hawkish as people think. Okay, so that's what I think about the Warsh sell-off, and we saw the effect on all the other assets. Remember, we are not out of the woods yet. We mentioned that we have to go to new highs before we are. Okay, before we get this move here, we didn't get this breakaway move. So now we have a potential for a lower high scenario to play out before going higher. Okay, I still think we go higher because the fundamentals of the economy are strong and the war is over and oil will go down, which will alleviate inflationary pressures, which will get the Fed to not raise, okay, and reverse all of this. Doesn't have to happen. If it continues, yes, we're going to go much lower, okay, but I just don't think so. I think this market will, in the days to come, digest this information and wait for him to act in this next meeting, okay, because now we really don't know. The market is just positioning itself for a worst case scenario, okay, which is an opportunity in my mind. All right, so let's see what happens on the last day of this week, Thursday, the 18th. Oh, by the way, tomorrow, Thursday, is options expiry because we have the Juneteenth holidays on Friday. Okay, so let's see what happens. Is the worst sell-off going to continue? You know my thoughts. Later.